And we see India as like the new China, really. It's had a really great growth over the last 5-10 years.
Welcome to Men of Steel, or should I say Women of Steel?
Kaye Ayub, one of the sharpest minds in steel industry, joins us for our first international episode.
The things that have been going off in the US with Donald Trump and have definitely added some complications to the steel market. So.
India exports 10 million tons of steel every year. 47% of India's exports of steel happens to European Union and United Kingdom.
So India has had some double-digit growth last year on crude steel production, producing 165 million tonnes of crude steel. So the steel prices will still continue to rise even after the war ends, partly because those gas costs and the electricity costs will still remain high. So the majority of the forecasts that we produce have an accuracy rate anywhere between 90 and 95%.
So 98 to 95% is good forecasting. It's quite accurate.
And I actually find that being a woman in the steel industry is an advantage, really. You might go to a steel conference, there might be 200 people at that steel conference, and you might be only one of, say, 20 people in the room. So it's easier to be noticed, I think.
It's going to be a roller coaster 2026.
Yes. Volatility is going to be a key thing, I think, this year still, unfortunately.
Powered by Heena Steel, your trusted steel partner.
Hello everyone, welcome to Men of Steel, or should I say Women of Steel. I'm very happy to have our first woman on this podcast, a steel expert. On this podcast, we'll talk about India's exports to European Union and United Kingdom. We'll also talk about the global trade. Also, we'll talk about the Iran and the Israel conflict and the effect on steel prices. And to talk about all that, we have a very special guest, Kaye Ayub, Head of Pricing and Price Forecasting from MEPS International, based out of United Kingdom. Kaye, welcome on the show.
Thank you for having me.
So MEPS is an international company based out of United Kingdom, specializing on international pricing, data, and various other things. Mm-hmm. So, tell us more about MEPS, the origin, how did it all start in United Kingdom?
Yep, so MEPS originally started in 1979. So we started initially as an management engineering and production services. So starting as a consultancy company, but we started researching the European steel prices for the European Commission in the early 80s. So we got into steel prices back then, more than 45 years ago, basically.
Okay.
And when that job came to an end, our managing director, the founder of the business, Peter Fish, decided he would continue researching the steel pricing in Europe and set up our European Steel Review. And we've been researching steel prices ever since and developing the business along those lines, concentrating on the steel market and steel pricing and expanding globally out to the US and Asia. And we expanded into forecasts and basically researching all of the different factors that goes into the steel industry. So we now serve the global steel market and our customers along those lines. So we focus globally now on the steel market.
Oh, that's brilliant. I don't think so. There are many companies like you who are focused globally. So, Kaye, let's talk about your association with MEPS. From how many years you've been involved with the steel industry?
So I started in the steel industry straight from university. I went to work for Outokumpu on their graduate scheme, where I worked for a few years before joining MEPS International. I've been at MEPS International now. This is my 20th year, so I've been in the steel industry for it would be 23 years now. So
that's a long and a good
time.
Experience.
Yes, yeah. I thoroughly enjoy my time in the steel industry. I find it extremely rewarding and interesting. So it's developed very much over the last 20 years, and the amount of things that I now look at in the steel industry that I never thought would come into play. So things like politics and war, for instance, as we've seen recently. So I find it really, really
Unfortunately,
interesting.
we have seen a lot of them, recently.
Yeah, and COVID. I mean, lots of things that have affected the steel industry over this last 20 years that I've been looking at the steel industry. So yeah, it's been a very interesting 20 years, well, 20 plus years in the steel industry.
Great, great. So tell us more about MEPS. What kind of clientele you have and what kind of work you all do?
So the industry that we serve, the clientele we've got, we're looking at forecasts, steel pricing data, and the clients that we look at, so they're anywhere from big corporate clients, distributors, traders, service centres, through to manufacturers and end users. I mean, they can be, big multinational companies all the way down to, end users, to one-man, companies who might be working in a small office at home, for instance. We try to make sure that, everybody can have access to steel pricing data. We're not selling things at a single price point. People can buy just the information that they need. They don't just have to subscribe to all of our services. So we pride ourselves on customer services at MEPS. We're selling things either on a portal on a cheaper service, or we have our more expensive publications that people can buy. The forecasts are popular at MEPS, but we also have just current steel prices as well that people can subscribe to.
So one thing is tracking the steel prices. I think a lot of companies do it in India and across the globe. But price forecast is something which is not heard of, and especially in India. Can you tell us more about price forecasting?
So the price forecasts we tend to do on a regional basis, with the exception of India. India is one of the few countries that we forecast on a country basis, because the Indian market is very unique, as you know yourself. It's a very fast-moving market. But the forecasts we produce are 12 months into the future.
Okay.
So we forecast them on a monthly basis, and we update those every single month based on everything that's changed in the market each month, which at the moment moves constantly. It's a difficult market to predict, the steel market, and our customers rely on us to help them navigate the ever-changing steel industry. Our forecast accuracy is something that we pride ourselves on. We've just recently won an award for our European steel price accuracy, which we're very proud of.
Wow.
So
Congratulations for that.
Especially at the moment in the current geopolitical climate, it's a very difficult thing to be doing. So
because there are so many factors affecting the steel prices internationally, locally. So I'm sure it's not an easy job.
It is not an easy job now, and we have to look at everything that goes into the steel pricing, not just raw material costs, and also historical trends, but now also geopolitical issues.
That plays a big part.
Yeah, economic issues, and other things that might come into play at any point. The things that have been going off in the US with Donald Trump, and have definitely added some complications to the steel market. So.
And what kind of accuracy are we talking of when we talk of forecasting?
So the majority of the forecasts that we produce have an accuracy rate anywhere between 90 and 95%, occasionally higher than that if you're looking on a 6-month basis. The exchange rates can quite often add in some complications to that, particularly when you get to the Asian market, where we're forecasting in US dollars, but the prices we're collecting are in local currencies. So those exchange rate fluctuations, particularly at the moment with the US dollar strengthening, for instance, can add a lot of fluctuations into those. So those accuracy rates can sometimes drop towards the 90%. But in Europe, where we're forecasting in euros and the majority of the prices we collect are also in euros, then those accuracy rates tend to be closer to the 95% and often higher. So generally, it's between the 90 to 95% our accuracy
so 98
rates.
to 95% is good forecasting. It's quite accurate.
Yeah, we like to make sure that we've keeping in those ranges. I mean, we've been forecasting since 2004, so we've been perfecting our models, and we continue to do that. We're investing in our forecast models constantly, and trying to find new ways to improve them regardless. We're not just satisfied with a 90 to 95% accuracy rate. We want to make that better all the time.
So on a lighter note, we Indian steel entrepreneurs sometimes, especially when the steel market is very sluggish, we go to an astrologer to ask them that how the steel price is going to behave in future. So I guess, we don't need to go to an astrologer. Probably we need to go to companies like you and probably look at the forecast. Of course, that's on a lighter note. Okay, moving ahead, what are the plans for MEPS? And then we move on to different subjects.
So we're the market leader at the moment in Europe. We do also sell into the US and Asian market as well, but we're looking to grow our presence in the US market and also in India, where we see a great growth potential in India. I mean, the Indian market is an exciting and fast-moving market. So we want to.
Yes, we are the second largest producer of steel in the world.
Exactly. Yes. So we want to help the customers in India and grow here as well. So we've got 2 big projects on the go in the US and also in India as well. So that's our current 2 big projects for 2026.
Brilliant.
And we've also got a project ongoing with our website to improve the services that we offer to our customers.
Great. So now let's move on to the global trade. Before we speak on that, let me set a context.
Mm-hmm.
India exports 10 million tons of steel every year. 47% of India's exports of steel happens to European Union and United Kingdom.
Mm-hmm.
55% of the steel which is exported to UK and European Union are flat products. These are some numbers. Let's deep dive into India's exports, especially in European Union and United Kingdom.
Mm-hmm. So India exports 1 million tonnes to the UK, but more than 80% of that is semi-finished, so slab and billets. Most of that is because of the transition from tar to steels, blast furnace to electric arc furnace steel. So once the electric arc furnace steel making is up and running in the UK, then those exports are likely to drop off. That should be, next year or 2028. So there's, some scope there for those exports at that point to fall away.
Right.
In the European Union, the majority, like you say, is flat steel, but that 55% is below the consumption split in Europe. So it's generally, much higher than that flat products wise. The long products consumption in Europe is a lot smaller than the flat products.
That's because it's a developed country, and I guess most of the development is already done.
Yeah, and also the construction market in Europe hasn't been performing that well recently. So the consumption of long products in the construction industry has been down. So you're looking at 30 to 35% of long products consumed in Europe. So there is some scope potentially for an increase in that percentage there. Although we've obviously got new quotas coming in, or changes to the quota system coming in on the 1st of July, which is going to have a massive impact on imports into Europe and conversely exports from India.
Yeah.
So we could potentially see a decrease in exports from India to Europe and also the UK, because it's the same in the UK as well. So we've got those safeguard measures changing in the UK and Europe from the 1st of July. There's a 47% cut in safeguards in Europe and a 60% cut in the UK, and an increase from 25% above quota tariffs in both UK and Europe. So it's from 25% moving up to 50%. So there is some risks and concerns in the European market and UK market on the import side. So the buyers are a little bit more wary about purchasing from overseas now. So I expect this year the exports from India will probably be down.
Well, I was just going to ask you about CBAM. You've been hearing a lot about that. Please explain us what is CBAM. You mentioned about quotas, you mentioned about duties. What is this additional thing, CBAM?
So CBAM effectively is levelling the playing field between the European mills and the non-European mills in terms of the carbon that's emitted when producing steel. So it's paying for the difference between the carbon that's emitted in Europe and the carbon that's emitted outside of Europe on the steel that's imported. So when a hot roll coil is imported into Europe, the carbon that's being produced or that's embedded in that steel, when it's coming in, it's paying the difference between what it would have emitted if it was produced in Europe versus what it's emitted when it's being produced, say in India, for instance, so you just have to pay the difference on that based on what is called the ETS price, which is the carbon price that's been traded on the exchange in Europe.
So in simple terms, you can call it carbon tax?
Yes, yeah. I don't know why they haven't called it a carbon tax, but the European Commission likes jargon, so, but yes, it's a carbon tax.
Okay. And what kind of products, you mentioned semis are also being exported from India, but
yes.
what are the different products that are being exported from India?
So the top three products tend to be hot roll coil, cold roll coil and galvanized. So it's the coil products or the top products really that come out of India into Europe and also the UK as well. So they're the popular ones. There are obviously other products that come in as well, like plate, for instance, and pipes. But yeah, generally they're the top three. So we're looking at potential for other products. I mean, stainless bars are also a popular one coming into Europe on the stainless side, on the sort of like, slightly value-added products. But there is potential for other products to come into Europe, especially now that we've got some changes to the quota system come the 1st of July. There might need to be a better spread when it comes to exports if India wants to maintain that volume come the 1st of July.
Okay. Now, we have seen Ukraine-Russia war. We are in the middle of Iran and Israel conflict. And the moment there is a war situation in West Asia, steel prices across the globe, they are on a rise. Let's talk about that. What are the impacts that we are seeing due to the Iran-Israel conflict?
The majority of the impact has been on energy prices and delays in shipping costs. So obviously we've seen an increase in gas and oil prices.
Right.
So that's had a big impact on electricity prices in Europe and energy costs in Asia. So they're the main two regions that have been impacted in terms of energy costs there. The US has been much less affected because they've got more diverse supply routes. So the electricity prices in Europe have gone up quite considerably, and some of the European mills there have been talking about introducing an electricity surcharge, although obviously we've had some recent developments with peace talks, and hopefully they will result in prices coming back down again. Hopefully we'll have a sustained outcome on that one. But a lot of the mills in Europe do have, quarterly deals or half-yearly deals or even annual deals on electricity contracts. So they are shielded initially in some regards, but they will be looking at the current electricity spot prices, and they will be trying to shield themselves with future rises in their costs. So there are a lot of impacts in the European market in terms of these current rises. Also shipping costs and shipping delays are impacting on the market. That's not just in terms of the actual cost of it, but if something that's been ordered is due to arrive prior to the 1st of July, if that's getting delayed, this is the safeguard measures on the 1st of July.
Okay.
And if it comes in after the 1st of July, then it may get caught in the lower safeguard quota and a higher safeguard tariff. So it may incur an additional import cost. So there's extra costs.
Are they not complicating imports to Europe, with so much of safeguard, quota, CBAM? I think if you're an exporter, you're going to thoroughly get confused and going into that web.
Yeah, I mean, with CBAM, safeguard measures, shipping costs and delays, it is very complicated now. And if you're an exporter or an importer in Europe, sometimes, the importers speak to us and they'll say that it's just not worth it, and they've returned to buying domestically. True. Or they've started to maybe buy more domestically and reduce the amount that they're buying from import, just to safeguard themselves a little bit more.
And talking of shipping costs, what kind of escalation have we seen recently in the last 1.5 months due to war?
So on average, we follow some of the shipping indices, and on average, we've seen increases of over 40% on the shipping costs. But that can vary. So we've seen much lower rises from some people. We speak to people who will quote the shipping cost rises to us. So we've seen much lower rises from some people who may have got mills that have got contracts with the shipping lines or may have their own ships, for instance. But then we also see much bigger rises as well. If we talk to some of the smaller traders, for instance, in China, who may ship only small quantities and less frequently to Europe. I was speaking to one in China, a small trader in China, who was getting a quote from a shipping line prior to the Chinese New Year of around $1,600 for a container, and then a few weeks ago got a quote of over $5,000 a container, which is obviously much more than 40%. So it can vary wildly. So we have seen big rises in some instances. And that was for a container to Europe, by the way. So.
And what about the escalation in energy cost in terms of percentage, if you have some numbers?
So in Europe, we've seen rises anywhere from sort of 10 to 15%, all the way up to 50% on the energy costs.
Okay.
It varies by country. Some of the countries in Europe are less dependent on gas-generated electricity than others, so they have seen smaller rises. And then others like the UK, where the energy costs are much more volatile and much more open to big price spikes, have seen big price increases. They've come off a little bit recently, and we've seen some government assistance programs in some countries, which is why there's quite a big variation in those price increases.
Okay.
But we have seen some big rises in some countries on electricity.
Let's talk of the post-war scenario. Right now, while we speak, ceasefire is announced. And I hope, we are looking at the end of this war. Firstly, we've seen a lot of lives being lost. So I don't think so anyone in the world really wants this war to continue.
No.
But talking of steel, the moment the war is stopped, when do we see the steel prices stabilize across the globe?
So the steel prices will still continue to rise even after the war ends, partly because those gas costs and the electricity costs will still remain high or elevated for a little bit because
there's supply disruption.
The supply disruptions exactly will remain in place. We've seen a lot of damage to those gas supplies that can't just come straight back online. That's going to take time to repair. In some estimates, we're seeing 1 to 3 years being cited to get those back online. Some of those can be replaced or supplemented by others, but ultimately we're talking a while before those steel prices come back down.
At least a couple of months?
At least, yeah. I'd say probably the third quarter before we start to see some normalisation of those steel prices, or at least the middle of the year before anything
because
starts.
Sometimes it can impact demand if the steel prices remain elevated.
Yeah,
does it impact demand?
Yeah, so we're seeing an impact on inflation. We've seen some inflation forecasts now start to rise, where the Bank of England or the European inflation rates and also the Fed inflation rates, they're now forecasting them to be a lot higher than they were previously, and the interest rate cuts now are either much lower or not going to happen at all, and in some cases forecast them to go up. So that's going to impact on investments, it's going to impact on finance rates, and it's going to impact on consumer spending, which ultimately impacts on steel demand. So the second half of this year, steel demand is likely to be a lot lower than was originally expected, which ultimately feeds back through into the steel market and feeds back through into steel prices. So yes, the steel prices the second half of this year are likely to be affected by that and could very well come back down again.
Okay.
And we saw the same thing in the Russia-Ukraine war with the inflationary impact of all of the gas prices, and steel prices plummeted in the second half of 2022.
It's going to be a roller coaster 2026.
Yes. Volatility is going to be a key thing, I think, this year still, unfortunately. So,
Okay. Okay, let's now talk about India. From the global steel industry's point of view, what is your take on the India's growth story, especially on steel?
so India has had some great growth over the last few years in terms of crude steel production and demand. Double-digit growth last year on crude steel production, producing 165 million tonnes of crude steel. And exports on steel is just shy of 10 million tonnes, which is, less than the 10% that, for instance, China are aiming for. So I think in terms of India, they are on a sustainable path. When we look at India, it's got great growth potential still going forward.
So, Kay, let's talk of the India growth story. From the global steel industry, what's your perspective on India's steel market?
So the India steel market is an interesting one. We often look and talk about India, and we see India as like the new China, really. It's had a really great growth over the last sort of 5-10 years, but it's much more sustainable than the Chinese.
That's a big
one.
compliment to India.
Yeah, I mean, the Chinese growth was really quite quick, quite rapid, but it was artificial in a lot of ways. Whereas the Indian growth, although we've seen, big double-digit growth, it's been based on domestic demand. So a lot of the Chinese growth, they had, they were building empty cities, they were exporting a lot of steel.
Yeah.
Whereas the Indian exports, for instance, are, they're just shy of 10 million tonnes, for instance, last year, which is much less than 10% of the Indian crude steel production last year. And the Chinese exports, I mean, they're still trying to target that 10% of exports to bring it down to that. So, the Indian steel market is a domestic consumption-based market. It's not an export-led market. So it has a sustainable growth side of it. So I think it's doing really well. It's infrastructure-led, and it's got, I mean, I've been here now all week, and all you see is, lots of construction going off.
Absolutely.
It's doing really well, I think. So, it's got a lot more to go, and a lot of infrastructure still to move forward on. So.
Yeah. You rightly said, there is a lot of investment from the government side on infrastructure, and of course, even on private side, a lot of development happening. So naturally, India is the place to be, especially when you're in the business of steel. As regards, exports, you mentioned that ideally 10% export is something any country should look at. When India aspires to grow and when the production is growing up, you already mentioned that in UK or Europe, exporting steel is going to be a challenge. One is internal-led consumption, which India is doing fantastically. But what should India do to increase exports?
So the global trade, also the global market in general, has been more complicated over the last few years with increased trade protection measures. We've got the safeguard, we've got tariffs, and we've got increased anti-dumping duties. A lot of those tend to have been directed more towards the Chinese exports rather than Indian exports. But, it is a growing global trade protectionism. But where they're being directed towards China should present more opportunities for the Indian exports, like, for instance, in the African market and other markets like that.
Right.
So, and there's also the potential for trying to move towards value-added or more value-added products.
Okay.
And another market that is going to be a big growth one is the scrap market.
Okay.
As the global market moves towards greener steel making, there's going to be an increased need for scrap. And we've seen that, and there's going to be the move, particularly in Europe, towards electric arc furnace, making, and there is growing calls for scrap to be either, or not necessarily banned export on the export side, but some limited or limitations on scrap being exported. So there are going to be needs for scrap on the global market. And I know India imports steel. Lots of scrap at the moment. So, scrap is a big one. I think that India could capitalise on, something that they could, look into. So people, if they are able to get into the scrap sector, that's something that could be a big growth.
Okay. Already India is in need of a lot of scrap. So I guess, that's one aspect that definitely the steel entrepreneurs should look at. Okay. What should India do to increase consumption and also the production of steel?
So in terms of production, value added is always good.
Yes.
It helps to support, the downstream manufacturing sectors, particularly when it comes to, like the value added downstream as well. I mean, the expertise are here in India.
Yeah.
You see a lot of like higher tech manufacturing now springing up in India, and you don't want to be importing those because India do still import steel.
Yes.
So it would replace the imports that India are currently doing. So there's still a lot of infrastructure to go that is going on, and any steel that's produced in India does still tend to get consumed. So it's just a case of build steel, and it seems to,
seems to manage.
Yeah.
Okay. And if you look at per capita consumption, right now we are at 105 to 110 kgs. What should India look at 7 years down the line as regards per capita consumption is concerned?
Yeah, I think a sustainable growth is obviously a key. I think setting targets that are too high generally. I mean, it's always good to be ambitious, but I think a 200 kg target in that sort of time span is probably realistic. Maybe a higher end target of 250 would probably be something you could maybe aim for, but it's like an upper end target, I think. But I think 200 is probably more realistic in the 7 to 8 year time span.
Okay, so I mean, if we achieve 250 kg in next 7 years, I think it'll be a dream come true, and India will flourish, and especially the steel industry will flourish like anything. So fingers crossed. Let's hope for the best.
Yeah.
Moving on, let's talk about the modes of sales and marketing, especially in the European market. The reason I'm talking on this subject is, I want steel entrepreneurs to understand how steel is being marketed, sold in other parts of the globe. And are there any learnings for us in India? So please, let's discuss about the sales and marketing. How does steel typically get sold there?
So in Europe, the distributors generally tend to buy direct from the mills and then sell to the manufacturers and the end users. But the mills will also sell directly to the manufacturers and the end users as well on contracts. So they will sometimes bypass the distributors and just go directly. The mills also have their own distributors and service centres in-house as well, so like mill-owned. And then you've got the traders that obviously bring material in from outside, and some of those will also buy from the Europeans as well.
Right.
So you have the majority of the market that is on contract, with then a smaller percentage of the mill that's on market that's on like a monthly spot side of the market. So a lot of the market is either on quarterly, half yearly or annual. This is the downstream, the manufacturing sector downwards.
Right.
So they're on contract based. So they're not buying on sort of monthly negotiated prices. So they have those deals locked in, a price that's fixed. And then those distributors will then either hold material for them in their name, or sometimes it's on consignment, and they have credit lines. So they'll build them on a 30, 60 or 90-day credits. In the US, it operates in a very similar way. So the distributors will buy material from the mills on a monthly basis. They'll have big master distributors, smaller distributors, and they will sell on to their customers. The US market's a lot more volatile. So those distributors all go in when the prices are going up and then come out all at once when the prices are going down. So the prices are a lot more volatile, and the price cycles are much shorter than in Europe. The Europeans are a lot more cautious, so they don't tend to like as much price volatility, and they will buy much more little and often. The distributors, they don't like to see the prices falling and being left
Take a hit.
being left with overpriced stock that
Right.
then they're losing money on.
Right.
So it's a little bit more of a cautious market, the European market, particularly since COVID, when everybody got left with a lot of overpriced stock when prices fell quite considerably during the COVID
I think the
times.
Indian steel distributors would relate themselves more to the US steel distributors. The distributors here, the community, the trading community are pretty bold. I think volatility in steel is something, it's an accepted fact. And we see day-to-day prices change, especially in long product and secondary steel. So I think, I can relate to more through the US distributors rather than the conservative European distributors. What kind of infrastructure does distributors in Europe have?
So you'll have some that are just stocking material, so just pure stockists.
Okay.
And then you'll have some that are just pure traders that are just, maybe don't even hold any material at all, and they'll just be pure sales officers.
Back to back.
Back-to-back sales,
Okay.
And then you'll have others that'll have decoiling machines, slitting, blanking, polishing, the full works. So you'll have anywhere in between from that. So they will be able to offer a full service to customers.
End-to-end services.
End-to-end, full end-to-end. Like I say, even with consignment stock areas. And then you'll get some really big distribution services where they'll have sales offices of their own as well in other countries, and then they'll distribute out to customers from a big warehouse, or they'll have a big warehouse and then smaller warehouses in other countries as well. So big network of distribution services.
Okay, so what you're trying to say is probably a distributor would have a warehouse in one country and then he will supply to the different parts of Europe?
Yeah.
But would logistic cost would not be one of the challenges there?
It sometimes is a lower cost than having multiple warehouses in that respect.
Valid point.
Yeah. And Europe is not, if you're comparing it to the size of India, it's actually, not that big in that respect. You can put something on a truck and ship it out quite quickly.
Borderless Europe.
Yeah, exactly. Borderless, exactly. So, the European Union, it's all almost one single market.
It's one single market, one single country,
in
a way.
Yeah.
And what kind of volumes a typical distributor would be doing on a monthly basis?
It can vary depending on the product, depending on the size of the distributor. You can have a distributor who's maybe only doing a few thousand tons a month to somebody who's doing, 100,000 or more. It depends on the distributor and the product.
And the appetite.
Yes, yeah. If you've got a big distributor who's, for instance, sitting in Germany, for instance, and then distributing out to all the other countries, they can be doing quite a lot of tons in 1 month across all their product range. If they're supplying both flats and longs, maybe they might also be doing stainless steel and also maybe aluminium as well, then they can be doing a lot of tons in a single month every month. There's a lot of scope for tons going out of the door, and it'll be a very busy distributor.
Interesting. Now let's talk about the businesses that are being owned, the mills out there, the distributors. Now, are these businesses family owned or they are professionally run companies?
It's a mix. We do still have family-owned distributors in Europe.
Okay.
There are less now than there used to be. So obviously,
Why is that?
Encouraging the younger generation sometimes to move into the business can be difficult. Sometimes they don't want to get into the steel industry. It doesn't always have the most positive image in the news. You get a lot of negative news about how the steel industry is struggling. There's financial issues or redundancies and steel closures. So it's not always the most glamorous industry image that is portrayed. Although, when you're in it, it's quite an interesting industry to be in, but obviously encouraging the youth to join the steel industry in the first instance is often the hardest bit. And in Europe, you can have one good year followed by several bad years. So
And that's the case in probably the entire steel industry, being a commodity, a lot of ups and downs.
yeah.
And off late, we have seen more downs than ups.
Yeah, exactly. Yeah. So sometimes you have to ride that up, and take advantage of it at the time in order to get through the bad years. And trying to convey that sometimes to the younger generation can be difficult. And they may want to go into other industries that don't have those down years. The tech industries and the AI coming through now.
Yeah, they have a lot of options. I think this seems to be a global problem because if you talk of the Indian steel industry, even the youngsters here, so now India is a big country, scattered into different states, and the steel demand, especially in Chhattisgarh, Jalna, these are the belts which are producing a lot of steel. Out there, you see the younger generation very positive, wanting to join the business. But the moment you go to the metros like Mumbai or New Delhi or Bangalore, out there, the youngsters have a lot of options. Sometimes they find steel business very stressful, and they are not very keen to join business. So I think something should be done to encourage the younger generation.
Yeah, I mean, podcasts like this help. Podcasts are something that the younger generation listen to, and us at MEPS are doing our own podcasts in terms of speaking of steel to try and get that message out, and I think doing more things like that will help, and trying to get the message that actually the steel industry is really interesting. I've been in the steel industry for more than 20 years, and there's a lot more to it than just a piece of metal. It is really exciting. And we just need to get that message out to them, I think.
You're right. Podcast will get hopefully some glamour.
Yes.
And it will increase the reach, and hopefully, will encourage more and more people to join the steel industry. As a woman, you've been there, you said, from 23 years. Of course, in India also, we see a lot of women, in steel business, right from being on the shop floor, handling their father's business, their brother's business, or their husband's business. In a way, of late you've seen a lot of women entrepreneurs, deep diving into steel business. But any challenges that you have faced as a woman being in the steel industry?
I mean, obviously, it is a male-dominated industry. I've come from a
And that's why men are steel.
I've come from a maths background, and at university I was one of two women on my course. So I've always been in sort of male-dominated industries, really, I suppose. So it doesn't really faze me. It hasn't really been an issue for me. And I actually find that being a woman in the steel industry is an advantage, really. You might go to a steel conference, there might be 200 people at that steel conference, and you might be only one of, say, 20 people in the room. So it's easier to be noticed, I think, as a woman.
That's quite a very different take.
I think it's an advantage, personally. So, that would be my opinion. I think it's better to be a woman in the steel industry. Whereas, if you're a man, you're one of 180 people in the room.
Oh, yeah.
So I think,
So we don't get noticed.
Exactly. So a positive. I think it's a positive, not a negative.
Okay.
So, be a woman in steel.
No, I'm sure a lot of women will get inspired looking at your journey. And in times to come, we'll see a lot of more women from India on this podcast.
Yes, I hope so.
Yeah. So let's talk about the future of steel industry from the global perspective and from the Indian perspective. What are your takes?
So I think the future of the global steel industry, we're seeing a lot of the move towards greener steelmaking in particular. We've seen some exciting things in Europe, especially with Stegra in Sweden. We've seen some other moves in other parts of Europe towards the greener steelmaking. So I think I mentioned before about scrap being a big commodity going forward. We're going to see that as well more in Asia. We're seeing some other electric arc furnaces being planned there in order to capitalise on moving steel or selling steel to Europe so that they can avoid some of those CBAM charges or those higher CBAM charges, because that's going to be something, that if mills want to export to Europe at that lower end, of the CBAM charge. They're going to need an electric arc furnace or some greener steel making options, and just an increase in global trade protectionism in the next few years. I think that's going to be an ongoing theme for the global steel market. So
are you trying to say it will further increase, because we're already seeing a lot of protectionism?
Further increases. Just sort of, we're already seeing, I've seen Europe and the US with this 50% tariff. We might see more countries look to put in CBAM related or other type of like measures to counter the European ones. Some reciprocal type things in place. I think we'll see more measures going in.
So countries who are seeing self-consumption will be at a advantageous point.
Yes, yeah, of which India is definitely one of those.
So India has nothing to worry about, and India has got a good future as regards the steel growth is concerned.
I believe so, yes.
Great. Kaye, you've been extensively traveling in India in the last 1 week. You've been meeting a lot of steel entrepreneurs. Please tell us, when you meet steel entrepreneurs as against the entrepreneurs in Europe and US, what is the difference that you find?
So the people that we've been meeting while I've been here over the last few days, there's a lot of energy and excitement and a lot of positivity coming from them about the Indian steel market, and not just domestically, but also when they're looking and selling abroad on the export market. They're wanting to expand their reach, they're wanting to expand their sales, and not just into Europe, but also into the US, into the African market as well. And they see a lot of opportunity, and they're very excited. They see growth ahead.
You find them more progressive?
Yes, very much so. They're looking to expand their product range in a lot of cases. They are just very upbeat. A lot of energy coming from them, which is massively different in comparison to the US a little bit, but more so in comparison to Europe, who have been very downbeat over the last few years. Very negative. The market has been quite weak in Europe for quite a long time now, and although we've seen prices increase in Europe, it's not been underpinned by real consumption, by real demand. It's a structural price increase. It's not underpinned by real demand at all. So the market in Europe is negative. The buyers are they're not happy. It's just quite downbeat, really. Welcome to Europe.
Okay. Kaye, you mentioned that in Europe, most of the end users use forecast price index for their contracts. Out here in India, we see end users, tend to buy steel almost on a day-to-day basis or on a weekly basis. What do you think? How does Indian market get more matured in terms of their buying?
So the European market, the end users buy on the contract. So they might link it to the MEPS prices. They do this so that they don't have to negotiate constantly or track prices on a daily or weekly basis, because that's quite time consuming for them.
Yeah.
So it saves them from having to negotiate constantly or look around for what the prices are doing all the time. So they can concentrate their efforts elsewhere, whether that's developing their business further, making more sales or purchasing elsewhere. So it helps them. It saves them a lot of time, a lot of money. So that's something that the Indian market could be doing, or the Indian end users could be doing differently.
Okay.
And that's where contracts and linking contracts to things like indexes or price series can improve and help businesses more. And the forecasts also help when it comes to purchasing more strategically. So if prices are going up, and we're forecasting prices to go up, then you can purchase ahead of price increases.
Right.
Or if you can see when they're about to go down, you can stop the purchases so you're not going to lose money on the downward trend. And that's how we try to help our customers with their purchasing decisions.
I suppose it's more smarter and more mature way of buying steel.
Exactly, yeah. Purchasing strategically. Yes.
Right. Done. Kaye, we are at the end of the podcast. I thank you immensely, your colleague Amit. Both of you came down specially to Mumbai from United Kingdom, especially for this podcast. You have been very transparent in all your, information on steel globally, the ways of doing business. And I'm sure with this podcast, the steel entrepreneurs will be very much enlightened, learn something out of it, and hopefully in times to come, become better and better. So thank you for coming.
Thank you for having me, and it's been an honour to be the first woman on Men in Steel.
Hopefully we'll have more women from India on Men of Steel. Thank you.
Thank you.
Powered by Heena Steel, your trusted steel partner.